What is a real world asset, Ted?
Pav, I'm glad you asked, because for the next 5 to 10 minutes, we will break it down.
Let's go.
So before we get into like individual sort of cryptocurrencies that fall into this sector, it is important to kind of simply explain what the tokenization of real world assets is, because it might seem simple, but it can sometimes get confused. And so we're going to break it down bit by bit. So a real world asset represents a physical asset like gold, real estate, and other commodities, and they're tokenized on the blockchain. So we've spoken about this a little bit before, but it's just really, this sort of sector has really been gaining traction a lot, particularly as BlackRock and the BlackRock CEO Larry Fink has called it out, being like, I want to tokenize every stock and bond out there.
I think his quote was, the ETF is to lay way to adoption for blockchain so we can then do tokenization of assets.
Yeah, exactly.
Kind of their plan. Yeah.
And BlackRock is leading the way in terms of like TradFi getting into the tokenization of assets, because we've seen their tokenized fund on Ethereum that's been super successful thus far. I think it's the biggest tokenized fund, blockchain tokenized fund in the world. So it's tokenizing bonds on the blockchain. So you can basically buy a fractionalized bond or a small amount of a bond. So it's like a low risk asset on the blockchain. So we think of blockchain assets like cryptocurrencies as being high risk. The idea is like bringing real world assets like gold, commodities, real estate to the blockchain. So it allows it to be more accessible.
Yep.
More liquidity. You fractionalize something. So when we talk about houses, like buying a house is very expensive, right? Like I know I can't buy a house outright right now.
Don't be so modest, Ted.
I mean, who knows? Maybe in 6 months. But, I might want to buy, because I'm looking to real estate as a valid investment, I might look to buy a fractionalized.
Well, you might look to spread your bets, right? You might want to buy a third of a house in 3 different capital cities.
Exactly. Yeah, exactly. Yeah. And so it basically reduces that commitment.
Yep.
And also makes it a bit more liquid and accessible, right? Like you could, I don't know how it will work, a few years down the track, but you could potentially day trade real estate.
You could. That's really what
like individual houses.
Yeah, absolutely. But yeah, that's pretty much it. Like I think something so boring and simple like bonds, it is a very clunky system. Even like lending and like traditional finances, TradFi outfits, like how the banks and the central banks operate, any sort of optimization there, they're definitely seeing that as an opportunity for real world assets. And you think about trillions and trillions and trillions and trillions of dollars worth of value going on a blockchain, whatever blockchain even owns, 20-30% of that market share, they're the kind of tokens that I think are going to be huge.
Yeah.
And that's kind of what we're looking to unpack today. So let's just dive in. So, I mean, obviously when we're accessing real world assets, there's a couple of different, I think there's 3 major sort of facets to the real world asset narrative, really. Yep. You've got the underlying tech or the blockchain for it. So you've got your layer 1s, layer 2s. You have your oracles. So how does data feed into these smart contracts?
Yep. So to break that down a little bit more, how does the real world data, for instance, in this case, the price of a house feed onto the blockchain? You need an oracle like Chainlink to bridge that data.
Yep.
And then the last one is the individual protocols. So we mentioned Ondo and Pendle before.
Yep.
As being 2 front runners in that regard.
Yeah. Some other examples: Clearpool, Centrifuge. They're all looking to again just give access to these sort of products, I guess.
Yeah. So let's break it down. So I guess if you're in cryptocurrency and you want to diversify into the real world asset kind of sector or narrative, whatever you want to call it, you might look to get in one of 3 of those ways, or more than one.
Yep.
So layer 1s, we've got here listed like your classics, ETH, and the layer 2s on ETH, so Arbitrum and Optimism. ETH is obviously the key one because it's the biggest and most decentralized.
You could argue the most secure as well, just because of its the way it's built. But
exactly. But ETH is so big and broad that it's got a huge ecosystem. I'm not yet aware of any layer 1s or layer 2s that just focus on real world assets. Like kind of like we spoke about a couple of weeks ago, how the Peak blockchain is building a layer 1 blockchain to focus on the DePIN, decentralized physical infrastructure narrative, whereas I haven't seen that yet for real world assets.
I think they're coming. I think I could be wrong here, but I did see QNT it looks like they're pivoting to that exact use case. So whether or not that's actually underlying tech that they have that's going to be useful, or they're just trying to run a narrative right now, let the market decide that. But yeah, I think I saw that, and I could be wrong, but Maker as well, MakerDAO, they might be starting their own chain as well for the same purpose.
Okay, gotcha.
Yeah. But you're right. Like, that's something that doesn't exist in a big way. So what if something did?
Maybe a bit of a gap in the market.
Maybe something to keep an eye out.
Do they even need a specialized blockchain for real world assets? Maybe not. But
do we need a specialized chain for gaming?
Yeah, exactly.
It's
a narrative.
It's all narrative. Yeah, it's all narrative. Yeah.
We love the word narratives.
We
here.
do. It's all about the story.
So yeah, you mentioned before oracles. I think two key ones at the moment are definitely Chainlink. So that's been around forever.
Yep.
That has always been like the kingpin of the Oracle networks.
You can kind of see their direction too. Like all of last year, we were talking as the market was heating up, them partnering with major banks, major central banks.
Did a big big partnership with ANZ, big bank here in Australia.
NAB as well.
NAB, yep, absolutely. So they're killing it there. And Python Network is, I guess, the new kid on the block.
It is. In
that space. Is that correct me if I'm wrong, on the Solana network?
I think it's cross multiple, but that's where I think most of the data feeds are sort of sending it to. Yeah, I could be wrong there.
Yep. And then, the protocols. So we've listed a few here. So Ondo, Pendle, Clearpool, and Centrifuge. So Ondo seems to be one that's popped up. We spoke about before. It shows some pretty strong performance over the last sort of week against Bitcoin.
Yep.
It's been gaining a bit of traction as well. Can you explain like what simply what the purpose of Ondo is?
Yeah, it's backed by the likes of Coinbase and Pantera, so two big VCs and fund like giants in the crypto space already. But it looks to me like essentially the product at this stage is giving access to traditional yield-bearing products on-chain. So we're not talking about you're going to make 20, 50, 100% APY like some of these more risky DeFi protocols that you see out there. They're looking just giving access to US Treasury bonds. So you can see here it's like 4.96% APY at the moment, and just general US dollar yields through their stablecoin USDY, so 5.2%. So again, this sort of bodes to like if money enters the crypto ecosystem, there might be a high chance of it sticking around if there is access to these better, more robust, traditional finance-backed products. And that looks to be what it is at this stage. I haven't looked at their roadmap to see what else could be coming. I would say this is likely just the start. But again, we're just looking for the same thing you could do out of crypto. Why not make it available in crypto so you can just keep all that money on the chain, really? It looks to me, the go there. But yeah, I mean, when you've got the likes of Coinbase behind you and Pantera, it's one that I don't think you can not pay attention to.
Yeah, absolutely. Personally. Another one I want to call out is Maple Finance. So it was actually started by an Aussie bloke who worked at NAB, I believe. I actually spoke to him on the phone, and he's a good guy. And they're kind of a smaller fish in the, sort of this pool compared to the other ones we listed here, but they do like on-chain lending, like securitized on-chain lending, and so they're really tying into that real world assets sort of realm. And I think they're more focused on the institutional lending side of things rather than like the retail, which we saw, the likes of Aave and, some of the other lenders, like they really picked up last bull market. So maybe this bull market, we might see a bit of a trend with institutional lending on chain.
Yeah. And exactly the same sort of kettle of fish, but maybe, I guess, one that might be more established, Clearpool Finance. So again, it's allowing the everyday person to be able to lend money to larger institutions for like prime brokerage. So like these like we mentioned, bigger institutions, lending is a part of their daily operations. They like to lend, pay it back on the end of the day, so they don't have to expose risk to their underlying capital too frequently. So you can actually, go search the people that you're effectively backing, and they're huge. They're huge trading teams. They're huge funds. They're huge. You got banks that are here. That's essentially a credit card on-ramp through crypto. It's everywhere. It's been around for yonks. They're paying, rates for you to give them funds. So, deposit USDT. Banks will then give you back, I think the current rate's like 23% APY, and they'll go and pay you back within a certain period of time. So, like, it's really just giving the investor more options at the end of the day. Things that are usually you have to be in the know or have a certain like level of credit to be able to access certain products. It's really removing barriers.
Absolutely. Yeah. So I guess in terms of those three categories, you could call them like low risk, medium risk, and high risk.
Yeah, effectively.
So the layer ones being the low risk, the oracles being the medium risk, and the real world asset protocols being the higher risk ones.
And I think about it, just tying it back to what we talked about before, like this is no different to other narratives that we spoke about in the past either. Like you've got very fundamental tech that needs to be established, maintained, functioning to be for any narrative, right? So for gaming, you would need a layer 1, layer 2 as well. You would need an oracle as well. You would need a marketplace. You would need like these dApps, like we talked about just before. So really the theme isn't different. It's just about the use case and the adoption. So what you'd want to see now is like fundamentally all these projects, more active users, more value locked into their networks, everything just growing on-chain metric wise. And that's going to show you that there's demand for it, right?
Yeah, and I think the continuation of BlackRock and maybe some other TradFi institutions getting involved in this sort of thing is just going to drive that.
Absolutely.
So I think the real world assets narrative is going to be one of the biggest ones in the next year.
We'll be screaming for a real world use case, right? So
this could be the one that leads the charge.
Yeah.